In this speech, I am going to make you aware of the GAAP, or Generally Accepted Accounting Principles. Have you ever been searching for a job and seen the phrase, "Candidates are required to have a knowledge of the Generally Accepted Accounting Principles"? Generally Accepted Accounting Principles, or GAAP, are procedures, standards, and principles that companies use to comprise their financial statements. They are also the accepted way to record and report data or financial information. In this speech, the goal is to inform you of the GAAP and why they are important to know and follow. As an accounting student, I am aware of just how important these principles can be, and I hope others will be too. What is GAAP? The GAAP are accounting rules and regulations used for the standardization of financials and have been adopted by nearly all publicly traded U.S. companies. They are used so future investors have at least a minimum level of uniformity in financial statements. The balance sheet, income statement, and statement of cash flow are just a few that the GAAP are applied to. The information on the financial statements is used by economic decision makers. Therefore, the GAAP must be income-based. Creditors, potential customers, and investors of companies use this data to determine if they should put money into the company or not. Basically, there are 10 main points that the GAAP focuses on. The first one is the regularity principle. This simply means the company complies to all rules and regulations. The second is the sincerity principle. This entails that company's financial status is a reflection of the accounting department. The third principle is the consistency principle. This means there is a fixed method of entering all similar items from period to period. Number 4 is the permanence of method principle. This allows the clarity and comparison of financial information provided by the company. The non-compensation principle is number 5. This occurs when all financials are available with all details at any time without compensation. Number 6 is the prudence principle. This is when financials are shown as is. There is no falsifying them to make them look better. Number 7, the utmost good faith principle. This is when future investors are given every little detail of the company. Nothing is to be left out. Number 8 is the full disclosure and materiality principle. This means if information is important regarding the company, that information should be disclosed in statements given to an investor. Number 9 is the periodicity principle. This means an accountant must assign each accounting entry to a time period. And last, number 10, the continuity principle, which means a business should remain in commission and not be interrupted by any financials. The purpose of GAAP. Without these 10 generally accepted accounting principles, companies would be free to compose their financial statements however they wanted to and whenever they wanted to. Allowing all of that free will to companies would make it hard on investors of the company. They wouldn't know what they would be getting out of the company, and this is why GAAP is very important. Also, by using the GAAP, the data is comparable to the economic times, making it easier for investors to use. The information the GAAP requires is reliable, consistent, comparable, and relevant. Although it is not required by some smaller companies to follow the GAAP, there are some situations that entail them to do so. How is GAAP applied? GAAP is applied by accountants through what is called the Financial Accounting Standards, or FAS. GAAP pronouncements are also found in statements made by the Accounting Standards Executive Committee, by expert accountants, and other practices that are less formal but are still accepted in particular industries. Here is a simple diagram of how the GAAP is applied through the different organizations. Because of the wide array of GAAP bases, accountants have to use their own knowledge and judgment to determine what they are going to call correct and ultimately follow, and also how the certain things should be construed and applied. In conclusion, generally accepted accounting principles are most definitely a main component of the accounting industry. Without them, there would be much chaos in the way that financial statements are provided and produced to outsiders, such as future investors and creditors. It is always important to follow the rules and regulations to make it easier on everyone. And remember, you have to be the judge of what to follow and what to leave behind.